I want Bitcoin to be $1 million, but I want the dollar to be worth something when Bitcoin is $1 million, right? You don't want hyperinflation that knocks Bitcoin to $1 million, but it's $500,000 to get in an Uber to go around Manhattan, right? You don't want that, right? So it's a bad situation right now.
Anthony Scaramucci is the founder of SkyBridge Capital. In this episode, he breaks down the institutional demand for Bitcoin, improving liquidity conditions, and growing regulatory clarity. He explains why this cycle feels different, with crypto increasingly becoming a long-term allocation for major investors. Do you think Bitcoin's biggest demand driver over the next decade will be institutions, governments, or will it be retail?
If I had to rank them, I think it's going to be institutions first. I think I'm going to surprise people by saying government second, but I really do think, as we're talking generationally, Bitcoin is going to be seen as a digital store of value. You're going to be able to buy Bitcoin in your 401k, and you're going to be able to buy it someday inside your bank app.
Anthony, thanks for joining us today.
I mean, listen, you're the blonde broker. I'm the outspoken one. I don't know. I got a worse nickname. But anyway, great to be on with you. Thank you, Erin.
No, thank you. Happy to have you on the show. Speaking of shows, I just saw that The Rest is Politics is #1 podcast in the UK and Ireland. That's huge.
Oh, thank you. Yeah, listen, I'm very super surprised by that, but very nice. Do you listen? Do you listen to the podcast?
So I'm a big fan of your co-host. I think she's lovely. I've been spending a lot more time over in the UK, and I know she's very popular.
Yeah,
out there. So I was like, you know what? I have to ask him, how is that doing a podcast?
So you're referring to Catty K, who I tell people is not my better half. She's my better 9/10 because she really is terrific, and she's very personable and incredibly knowledgeable. And she makes me smarter. So I'm glad to do the show with her. And I will tell you that this is sort of a weird thing to say, but this could be the reason why it works. I like listening to Catty K. I want to hear what she has to say.
Yeah.
So it's a good give and take on the show.
Yeah, I would love to meet her at some point.
All right, well, that's easy. Consider that done, Erin.
Woo. Okay, cool. Yeah, big fan. So before we get into the segment, I want to touch on some recent headlines. Energy facilities have become major targets in the war, and the markets definitely do not like it. Qatar confirmed the LNG plant was attacked with missiles. Anthony, what is the cost of damage being done right now in the Middle East?
Well, there's a couple of things. I guess the big headline from today, which I don't think people are as focused on, is Secretary Hague is asking for $200 billion. He thinks he needs $200 billion to finish the job. So I don't want to make your podcast political, but the president's saying that the job is over, everybody's decimated, but then you're contrasting that, well, look, I need $200 billion. So if you factor in the costs of the war and you factor in the tens, if not hundreds of billions of dollars of damage that's been done to the infrastructure, and since you mentioned the gas facility in Qatar, it took 14 years. That's a state-of-the-art gas facility. It took 14 years to engineer that. They brought down about a third of it last night with missile attacks. And what I don't like about that is that those two countries share that offshore gas field. And they have had a alliance. They've been natural allies as a result of that. And I would call that the friendly bridge, if you will, the friendly bridge between the west side of the Gulf and the east side of the Gulf. And last night, the diplomats and the military personnel from the Iranian government were asked to leave Qatar. They were told they had 48 hours to leave. So I'm not in love with that. I don't like the way this thing is going. And as you and I are speaking, crude is $116 a barrel. And it's up from $55.60. And so, these things are keeping me up at night. The Strait of Hormuz is closed, but I think this. Lots of tankers are getting through that are Iranian flag tankers that are on the way to China. Now, the president and Secretary Hague could bomb those tankers, but then that would be a huge, huge escalation, and I don't think we want to do that. So the strait is closed for allies of America and Israel, but it's basically open for China for now. But I have to tell you, those purchases are denominated in renminbi. The Chinese currency. And so I'm a little worried. This is a macro podcast. You'd have to put up on the list of worries the dollar reserve status.
Absolutely.
You and I both know that the Fed held rates steady at 3.75% yesterday. Powell basically said that the outlook is uncertain, which is Fed speak for we have no idea what the hell is happening. Okay. You're also seeing some stagflation, which none of us like. And Powell also said something in his remarks I think people should know is that he's accused the president's tariffs of creating inflation as well. So I don't know. Again, I'm not a supporter of President Trump's. I want to be objective on your podcast. I certainly want the Americans to win this. I'm all about our troops and helping them. And I pray for our troops every day. But I don't think the people that voted for Donald Trump were expecting an additional Middle Eastern war after he campaigned on no more forever wars. So, listen, I mean, that February PPI number, Erin, came in very hot, okay? And of course, Bitcoin went from 74,000, boom, boom, down to 69,000 over the last couple of days. And, if I can keep going, if you don't mind, I'm also watching the flows coming into U.S. treasuries. And guess what's happening, which I've been telling people. Foreign central banks are diversifying. They're buying gold. They're buying other treasury assets from other sovereigns. And listen, I'm worried. I'm worried because, you got a real bifurcated economy going on right now. That thing that they call the K is real. The upper class is doing reasonably well. The lower and middle income people are in a huge affordability crisis. So anyway, those are the things I'm worried about.
Yeah, that was one of my next questions. What does this mean for the price of oil and gas for American families?
Well, I mean, you could be looking at $6 a barrel coming into Memorial Day. You went from high twos to mid to high threes, but at $115 a barrel, you're heading for fours. Okay, and that's $4 a gallon, and you're going back to Joe Biden inflation territory post COVID, right? So it's interesting. The president gave a speech, State of the Union, praising the reduction in gas prices. Let's give him credit for that. But now we're going in the other way. We've had a 50% increase in gas prices in the last 10 days. So, look, I'm worried because gas is regressive, Erin. First of all, we all need gas, but guess what? The very wealthy, it's a much smaller percentage of their consumption. But if you're a middle class, lower middle class person, you got to get back and forth to work. It's like a tax, it's like a regressive tax on you. And it then causes this whole deconsumptive negative circle, if you will, vicious circle.
Absolutely. Do you think it's going to be extremely difficult for Iran to return any meaningful dialogue with the U.S. Since I guess we repeatedly shifted from negotiations now to military action?
Well, again, I think you were very close to a deal on February 27th. Okay, some of our allies have said, wow, that deal was right there. It could have manifested into a deal, which would have meant broad-scale de-escalation. I guess the problem now is, again, I don't want to make this overly political, but if I were in the room, I would be asking people the following question: what is victory? Yep. Tell me what victory is to you, because it's been moving around what victory is. Some would have said regime change. Some would have said missile degradation. Some would have said reduction of ability to make a nuclear bomb. Tell me what is victory now. The president, by his own admission, he said it this week, I didn't expect him to close the strait. I didn't expect him to attack our allies in the Gulf. He did say that. I'm not saying that. I mean, one would have to say, well, why? Why would he not expect that? That had to be on the war game chart in terms of the game theory of outcomes. But I really think he thought this was like the 12-day war last year, or the strikes that took place on the bunker busting situation. He felt that there would be minimal retaliation and there would be a return to the negotiating table. I think ultimately, when we judge this, killing the supreme leader of Iran probably touched off a checklist, a well-planned 25-year orchestration of what they would do, recognizing that they're a weaker military power, but they have the home field advantage of being right there at the Strait of Hormuz. And so closing that puts economic leverage in their hands. And it's also, it's upsetting the global economy. So I don't know. Could they get back to the negotiating table? Yes. Anything could happen. Would I like to see that? I certainly would. Yes.
You've mentioned some concerns about capital flows and U.S. credibility. What macro signals are you watching most closely right now?
Well, I mean, there's a lot of different things to unpack there, but I think the biggest macro signal is coming from the Fed.
Yeah,
and what is the Fed saying? Maybe one rate cut this year, possibly not. The Fed is telling you you've got slower growth, less job opportunity in the country, higher inflation. Okay, so I'm the product of the 1970s. That's stagflation. So when you look at that, as I said, the PPI number came in super hot in February. That's inflationary. So you can't sit here. You could have sat here 3 weeks ago and said lower gas prices, reasonable amounts of productivity, the Fed should cut rates. Okay, remember, I think Kevin Warsh has told the president, yeah, I'm ready to cut rates for you, but he's not going to be the Fed chair anytime soon because you have a criminal investigation going on against Jerome Powell, which Tom Tillis has said, hey, I'm on the Senate Banking Committee. We're not even going to put him up for review. He's not even going to have a chance for Senate confirmation until you drop that case. And so there's a lot of north-going and south-going Zaxes. I don't know if you remember that from Dr. Seuss, but we're right here at Loggerheads in Washington. So I'm looking at that saying, wow, if the markets want relief in terms of rate cuts, you're not getting it. And capital flows on the margin, sovereigns and others are placing capital on the margin outside of the United States. And those are things, frankly, I'm not in love with.
I like the Dr. Seuss reference too.
Yeah. But I mean, that's what's going on. That's why it's so relevant, right?
Are we still in a macro driven crypto market, or I guess do you think crypto's finally become its own asset class?
Let's see. So that is such a great question. And I'm going to answer it by saying that it's actually both in my mind. Okay. It's not a super satisfying answer, but I think it's the most honest one because Bitcoin's 30-day correlation, if you look at it with the S&P 500, it's sitting at about 0.55 right now. So that's, more correlated than I would have liked it. I would have thought Bitcoin would have broken, and I would have thought Bitcoin would have been more like gold was last year. But if you even look at Bitcoin today as an example, oil price is up, Bitcoin is weaker. It's down about 3%. So that's high. Okay. And, Bitcoin sold off alongside of equities when the war started. It then diverged for a temporary period of time, but it's back in that correlation again. So I don't think until we get the Genius Act completely clarified and then we get the Clarity Act passed, I think you're going to see this sort of coupling still. I don't think you're going to have full decoupling until every bank in America you can domicile your Bitcoin, you can custody your Bitcoin with every bank in America. So that's me, but it's on the trajectory. That I would just tell people stuff happens longer. It's like house construction. You want the house done yesterday, but it's like 6 months later than you thought it was going to be and way more expensive. That's Bitcoin.
This show is brought to you by Token Relations, the leading investor relations platform for blockchains, protocols, and token issuers. You can read the Market Run-Ups weekly newsletter and best investor updates on ecosystems like Solana, Polygon, Avalanche, Chainlink, Aptos, Ripple, and more by subscribing for free or checking it out at www.token-relations.com.
Let's say the Fed started to aggressively cut rates. How do you think that would change the crypto cycle?
I mean, it would explode. I mean, you'd have that would be full-on rocket fuel for Bitcoin. I don't think that's going to happen anytime soon. If you look at the dot plot from yesterday as an example, it's only signaling one cut this year, maybe a first quarter 2027 cut now. Powell is basically telling you, I'm stuck. I'm in a oil-driven, inflation-based economy right now. What I found interesting yesterday, the president wasn't beating up on Powell. He didn't have any legs to stand on. You just knocked oil prices up 50%.
Yep.
And so how the hell are you going to beat up on the guy? And also your Fed governors that you appointed were with Powell on the decision making, because you don't want massive rampant inflation. I mean, this would be absolutely devastating for us. But listen, you're not going to go into a recession yet. I don't think so. But they've got to be worried about that. They've got to be worried about a recession plus inflation. Now, I'm not predicting that, but directionally, we are more going in that direction than before. But are you telling me, yeah, we're going to cut rates? Novogratz says this better than me. Mike Novogratz once said to me, I want Bitcoin to be $1 million, but I want the dollar to be worth something when Bitcoin is $1 million, right? You don't want hyperinflation that knocks Bitcoin to $1 million, but it's $500,000 to get in an Uber to go around Manhattan, right? You don't want that, right? So it's a bad situation right now.
But we can get to a world where it is that.
Yeah, I mean, listen, I would like to get to that world slowly. I think Ray Dalio, myself, Mike Novogratz, Paul Tudor Jones all see the one-way situation of this. You're going to have massive continued money printing, and you're going to keep going on this, and I think that's a disaster for all of us. I certainly, there's a way out of it where Bitcoin has got a nice price to it, but it's not a blowaway inflation runaway train. You know what I'm saying? I think we both know Lynn Alden, right? What does she say? This is the train that never stops, or something like that. This is like a runaway train. Nothing stops this train, is I think her exact quote. And so, yeah, I'm worried about that. How could you not be worried about that? And again, older people, which I happen to be older, frankly, my generation buys gold. They hate Bitcoin. Your generation loves Bitcoin because you understand the technical properties of it. And so as your generation ages into those economic positions, Bitcoin is going to become more and more relevant. And I said this about the web. When I was a kid, we didn't have, I know this is really dating myself, Erin, but we didn't have email back in the day, okay? And then all of a sudden, when I was in my 30s, we had email, and I was like, oh, this is cool. And then the web exploded, and then a lot of people that were older than me said, poo-poo, the web. Even Bill Gates said it was a fad. And I'm like, well, this is not a fad. And guess what happened? The 30-year-olds that were getting email became 50-year-olds, and the web exploded. Yep. And that's what's going to happen with crypto. That's going to happen with Bitcoin.
Yeah, I was, you know what, for the sake of this interview, we're the same age. I was going to say.
I like that. Okay, I want people, could we restate that, please? If we make that the top of the show.
Yes, we are the same age.
Unfortunately, that isn't the case for me, but at least I'm self-aware. At least I look at you and I say, you're the future. And I think people my age have to recognize that there isn't necessarily a generational divide, but there's generational learning. And so I like spending time with people like you, Erin, because I think you see the future from a vantage point that I honestly can't see it from, and I don't want to be closed-minded to that.
Yeah, and I think we're really trying. Like a lot of, we call ourselves educators or KOLs in the space that are coming out and they're, implementing new shows. And we're also trying to talk to people who are more experienced and have been in the markets for a lot longer. I mean, I think the stats, what was it? On Wall Street, the decentralized holdings have gone from like 2% to 7% recently. So yeah, we do see a ton of crypto adoption, and that's kind of what we're pushing. So to your point, yeah, the boomers love gold, but I am hoping and praying that they'll slowly see the value of Bitcoin and digital currencies, and that, we'll have this positive effect over time.
Yeah, exactly.
Do you think Bitcoin's biggest demand driver over the next decade will be institutions, governments, or will it be retail?
It's a great question. So, I mean, I'm obviously guessing at this, but if I had to rank them, I think it's going to be institutions first. I think I'm going to surprise people by saying government second, but I really do think as we're talking generationally, 10, 20 years from now, Bitcoin is going to be seen as a digital store of value. And so therefore governments are going to have to be in there. Retail will be the largest in terms of absolute members. Someone will have a 0.3 of a Bitcoin, a 0.1 of a Bitcoin, et cetera. But I'm talking about the magnitude is probably going to be from the institutions. You and I both know that the ETFs were a big game changer. You're seeing as a result of the ETF pension funds, endowments coming in, family offices have gone from zero allocation to 1, 2, or 3%. Morgan Stanley, who yelled at me for buying Bitcoin 5 years ago and said that even though I have a macro direction in my fund, that I was off message and I was buying internet magic money, and now recommending to their high net worth clients at a 5 times more price valuation. I was buying it for clients at $16,000. They're now recommending it at $68,000, and God bless them for that because it is going to go higher. But that's what's going on. You're seeing that transition, and listen. Remember, you're going to be able to buy Bitcoin in your 401k. And you're going to be able to buy it someday inside your bank app. You're going to be able to be on your bank app. It's not just going to be Robinhood, Erin. Okay. I'm at Chase Bank. Let me put a little bit of this money into Bitcoin. So all 3 waves, in my opinion, are going to happen simultaneously. But I think the institutional wave is really going to be the one that pushes people over the next decade.
I feel like it's one of those moments you can tell Morgan Stanley, like, how do you like me now? Right?
You can't do that. So if you notice, I don't ever say that because I don't want to be that guy, number one. But then the second thing is,
I'll say
get mad at you anyway. You can't win, yeah. Right? Because if you were right and they were wrong, you can't make them look bad. And obviously they're never going to admit it. So you can't do that. But I just find it ironic that I was buying this stuff for clients 5 years ago. But you're never right because, remember, I bought it at 15. It went to 69. I thought I was a genius. Then I went from 69 back to 15. Then I'm a dummy. Then I went from 15 to 126. Why didn't you sell it all at 126? Now it's at 68. Guys, that's not how it works. Sit in the position. Take a long-term approach to the position,
Absolutely. So you're saying institutions, then second would be governments, so. And then retail. Okay, retail is going to be the smallest holding.
Greatest number of people, but I think just on an aggregate basis, it's going to be a little bit smaller.
You actually convene all 3 of those audiences at your SALT conferences. What's on the horizon for SALT in 2026?
Well, I mean, listen, we had already, we partnered with CoinDesk and the bullish guys in Hong Kong. I thought that went really well. We've got this Bermuda Digital Forum coming up in May. Which we're doing with Penrose Partners, but we've also got Coinbase and Circleback as the big sponsors. We're doing SALT with Kraken in Wyoming. Are you coming to Wyoming, Erin? I hope you will, because that's one of our best events,
I would love to. I think Jacqueline is planning on coming. Do you know I was at SALT in the Bahamas? I don't know if this was 2022.
Crypto Bahamas. It was 2022. Yeah,
that was wild.
That was one of our more fun events. We probably should have known that was the end of the world, okay? When we were sitting at lunch with Orlando Boom and Katy Perry and Tom Brady and, oh my God, we probably, Giselle, probably should have known that was the end. But that was a lot of fun.
My family didn't believe me. They did. I came home and I told them, they were like, no.
Yeah. Well, that was one of our most fun events. So could we ever get back to the Bahamas? Maybe someday. I think everybody's scarred by what happened with Sam, so maybe not yet. But I will say this to you about our conferences. We've got 3 big ones now. We're doing one in Bermuda. We're doing this Hong Kong thing with CoinDesk, which I think we're going to end up doing again. That was February. And then we have the Wyoming event. And then our sort of institutional, non-crypto, but sort of macro event is in November in London. So
Ooh.
It's a total of 3 that we do on our own, 1 that we do with CoinDesk and Bullish.
Yeah, I would love to come cover media or do some press. That'd be awesome.
We've got to get you there.
Yeah. What's the biggest misconception that traditional investors still have about Bitcoin?
Bitcoin is a speculative toy with no intrinsic value. I was on the Bill Maher show on Friday. Bill hates crypto, okay? And then I was sitting there with Lloyd Blankfein, my old boss, CEO of Goldman. He literally said, it's got no value, and I'm super happy every day that it goes down.
Nice.
And I looked at the 2 of these guys. I was like, oh, my God. And then I slipped out. I said, okay, we just identified the 2 oldest people on this panel. You know what I mean? And of course, they got mad at me for that. But I think the biggest misconception is that gold does not have a management team. I'll just let people know. And gold, while it's mathematically scarce, it's not as mathematically scarce as Bitcoin. And I think if you really read things like Neil Ferguson's book, The Ascent of Money, Bitcoin has all of the qualifications and has all the characteristics that we ascribe to money and store of value. And I think these guys are missing that. And I think it's a misconception, and I think it's going to age out, Erin.
Yeah, and it's still being monetized as well. So it's interesting. I love talking to boomers about Bitcoin. I love getting their takes. I did a podcast last year with a guy who also only hated on Bitcoin. He was only buying silver and gold and hated meme coins. And then his community actually made a meme coin for him. And I think it hit, I don't know, like 2 billion market cap. Like it was insane. He was like, all right, okay, there is something here with crypto. And it takes that sort of awareness and knowledge from honestly, the internet and people of our generation to talk about it and maybe to launch a token. I guess that leads me to tokenization of some of these real world assets. It's important. It's becoming a massive narrative. Which assets do you think will get tokenized first at scale?
Well, look at the deal that Kraken is doing with the NASDAQ, right? I think you saw that information, right? So they're basically going to, I think, tokenize stocks and bonds. Obviously, we'd love to get the Clarity Act in there that we can give you the specificity, if I'm saying that word right, the specific terms that we need, specificity. Maybe I'm saying it right, but anyway, my point is that I think it's stocks and bonds, and I think that's happening very quickly. I actually think you and I could be sitting here next year if you're kind enough to invite me back on, where you have 24 trading for stocks on the NASDAQ operating off of the rail system of Kraken. So I think that's very possible in the very near future.
Yeah, I do as well. And Aave. Let's see. What do you think of Avalanche? I think I heard you were discussing some tokenization going on with AVAX.
Listen, I'm a huge fan of AVAX. I think AVAX, like everything else, has gotten crushed in the last 6 months, but the utility is there. I think that the thing with AVAX for me is I look at the adaptability, the flexibility of AVAX in terms of its operating system and the software around it. I've often said it's like a Swiss Army knife. Older CTOs look to AVAX. Citibank, JP Morgan, they're all using AVAX part of their rail system because they can customize it. And so Solana, to me, might be a more broader scaled product. It's very cheap and it's easy to use, very secure.
Quick.
But AVAX, if I want customization, and so I believe that there's going to be market share for AVAX. So these things are getting the what beaten out of them right now because we have no clarity. But if you get the Clarity Act passed, which I hope will happen this year, I don't know. I think the war has disrupted that, frankly, and the Democrats. I think we've made a mistake as an industry. We don't want crypto. We don't want the regulation around crypto to be partisan. We have to figure out a way to get crypto into a post-partisan situation. And if we do that, it's going to be better for all of us. So, I'm hopeful that we can do that. I don't know if we're going to be able to do that, but if we can do that, we'll get this thing passed. And then you'll see things like Solana and AVAX. People are like, whoa, why didn't I buy that when it was so cheap?
What's your portfolio allocation between Bitcoin, crypto infrastructure, and traditional assets today?
Okay, great question. So, if you asked me this 6 months ago, it was a bigger number for Bitcoin, because I had probably 45% of the portfolio in Bitcoin. Now it's like 25-ish%, because I bought more Bitcoin on the way down. I would say traditional assets are probably 60. And I would say the rest of that stuff is sort of in the infrastructure piece. I own some Brevin Howard Digital and things like that are in that and in those layers. But, again, I guess I've benefited from getting my ass kicked in life and still being here, Erin. So even though Bitcoin is down 50-ish%, I'm nonplussed by it. And I think it's going to be, I think it's going to be okay. And I'm telling people, have a long-term view. Let's address this in 2029. Let's address it again in 2032. Let's have a long-term view,
Good. Okay, curveball question, last question. What is the legacy that you, Anthony Scaramucci, want to leave behind in the world?
So I'm a big non-legacy person, actually. I don't really give a shit. Let me tell you why. Because I'm going to be dead and no one's going to care. And I tell people, you think you're relevant, but you're actually really not relevant. I think, from 1850 to 2350, that's a 500-year period of time, and half of that hasn't even happened yet. But I think there's only going to remember one person from that era, like 10,000 years from now, It's going to be Neil Armstrong. He was the first guy to walk on the moon. That's it. No one's going to give a shit about Barack Obama, Donald Trump, definitely not me. And so I'm more of the people that just live your life, I like being in a position, though, where I can do some mentoring for younger people. So after I'm dead, if people say, hey, he was a good guy, he was trying to help me with my career before he croaked, that would be a nice thing to say. But I'm not overly concerned about my legacy. Why are you laughing? Why are you laughing? It's true, right?
No, they're going to remember Tiger King. You know what? They'll remember Tiger King.
Nobody's going to give a shit. All right, well, thank you, Erin. It's great to be on with you.
Awesome. Thank you so much.
All right, I'll see you.
I'm happy to have you back
events,
next time. Thank you again.
All right, that's the deal. I'm going to hop abruptly because I got to go to this other thing.
Hop and
okay?
we'll chat. We'll catch up later. But
Okay.
Thank you again. Thank
See
you
you.
so much. Well, that's it for today's episode of the Market Run-Up. If you enjoyed this episode with the Mooch as much as I did, please give us a like, a 5-star rating, and make sure you subscribe. See you guys next week.